Hello everyone, I am Kantharaju NP, Assistant Professor, Ananya Institute of Commerce and Management. In this video, I am going to explain absorption costing and its features. In absorption costing, there is a term absorption cost. Absorption cost is the cost which are taken into consideration of both variable cost and fixed cost incurred for the production of a particular product. That's why absorption cost, or it is also termed as absorbed cost, is a managerial accounting method that accounts for the variable and fixed overhead cost for producing of a particular product. That means to say that when I compare to the marginal cost means we are considering only variable cost in order to produce the particular product. We are taken into account only variable cost in order to calculate the total cost incurred for the production of the particular product. But in absorption cost, we are going to take into account both cost, variable cost as well as fixed cost, in order to calculate the cost incurred for the production of a particular product. Then what is absorption costing? As I said, costing, it is a technique which is ascertaining the total cost which is incurred in order to produce the particular product. Here it is a managerial accounting method for capturing of all costs associated with manufacturing of a particular product. Such cost we may call it as absorption costing. Then there are other terms also used to identify the absorption costing. That means other terms of absorption costing. Those are absorption costing, or also termed as full costing or traditional costing or total costing. The name itself suggests us here we going to take into account variable cost as well as fixed cost for producing of a particular product is called as absorption costing. Then one of the definition, it is defined by CIMA. Absorption costing means that of all the manufacturing costs are absorbed by the units produced. That going to absorb both cost, variable cost and fixed cost. Next, I am going to discuss or explain the features of absorption costing. Before I am going to explain the features of absorption costing, in marginal costing, we taken into account direct material, direct labor, direct expenses and variable overhead in order to calculate the cost of product. But in absorption costing, we are going to take into account variable cost plus fixed cost. That's why we are taken into account direct material, direct labor, direct expenses, variable overhead and also fixed factory overhead. That means for absorption costing, we add fixed cost. So that's why the cost of production is equal to direct material plus direct labor plus direct expenses, variable manufacturing overhead plus fixed factory overhead. Then next comes to the features of absorption costing. In the absorption costing, product, the cost is determined on the basis of full cost, that is variable and fixed manufacturing cost. As I said earlier, in order to determine the product cost, here we are going to take into account both cost, variable cost and fixed cost. Then next comes to the second one is that the cost of inventory will be higher in absorption costing because of in valuation of inventory we taken into account both cost, variable cost and fixed cost. That's why there will be higher value of inventory in absorption costing than the marginal costing. So that's why in order to calculate the opening stock of finished goods and closing stock of finished goods, which we want to calculate the value of such opening stock and closing stock of goods, we are going to take into account variable cost as well as fixed cost. That's why it is always the cost of inventory will be higher in absorption costing, because we are treated variable cost and fixed cost as product cost. Then next comes to the third one is that absorption costing, net income changes with production. Definitely according to the variation of the production, income will also changes, because here we taken into account both cost for calculation of the cost of production that directly impact on the income, that will changes according to the level of changes in production. Then next we are going to the fourth one. It is a conventional costing where gross profit is determined by subtracting the cost of goods sold from sales, and net profit is determined by subtracting all commercial expenses from the gross profit. In this way, we are going to calculate net profit in absorption costing also. That's why we are deducting the cost of goods sold from the sales revenue, we will get the gross profit. Then we will deduct the all commercial expenses from the gross profit in order to get the net income. This is the way we will get the net income in absorption costing. Then the next one is that fixed costs are changed into variable cost because of variable cost and fixed cost. Both costs are treated as product cost. That's why whatever the fixed cost we have calculated for a capacity or normal capacity or standard capacity, that again converting into a variable cost. Then how we will be converting into a variable cost? The fixed cost we are going to be divided unit wise, the total fixed cost divided by number of units produced in this particular period. By this way we are going to convert fixed cost or changed into a variable cost. There will be always under or over allocation of factory overhead is required to be adjusted in absorption costing as it is included in the cost of production. That means in absorption costing we can see over absorption and under absorption. When it will come under absorption, when our fixed cost is under absorbed in manufacturing process, that means to say that we set the fixed cost according to the normal capacity. When normal capacity varies according to the level of production, if we set normal capacity as 10,000, then we are calculating the fixed cost for the standard capacity 10,000 units. Then these standard capacity may vary according to the demand of the market. Sometime it may produce 8,000. Then 8,000 units are produced, there will be under absorption. Again we need to be readjusted it. Then next, over absorption means when company crosses 10,000 and above. For example, if it produces 12,000, there will be over absorption. Again, those over absorption and under absorption we need to be readjusted in order to get the right income in the absorption costing. So that's why here it is, there will be a over absorption and under absorption when there is a deviations between the number of units produced and number of units set to fix the fixed cost. Then the last one is that pricing. As I said, in marginal cost, in order to fix the price of the product, we taken into account only variable cost, then add some percentage of profit to that to fix the price of the product. But in absorption costing, we taken into account total cost, variable cost plus fixed cost, then add some percentage of profit to that, then fix the price of the product. But in marginal costing, only variable cost we consider as a cost of product. But in absorption costing, we consider both variable cost and fixed cost as cost of product. So this is the all about features of absorption costing. Thank you.